Man, bonds are looking good now, my friends. Weird for me to say because I was an anti-bond guy for many, many years. But when the situation changes, I change with it. All right, so just side note, where have I been? Well, I was a naughty boy for videos I've done 2 years ago. Here's Pablo. So for you guys who missed Pablo, we're back. But I was doing a lot of blog posts and on my email list telling people about my blog posts. So if you're not signed up for my email list, I'll put a link in the show notes. It's free. Sign up. If you look, I don't shy away from my politics, my religious, my conspiracy theories. So if you don't like any of that, don't sign up. I don't care. But if you want to be kept informed of where your old buddy Josh is and Pablo, sign up for my email list. Because I had many people saying, Josh, where are you? Where are you? Well, if you sign up for my email list, you would have known. I'm also on Locals in Rumble. I'm going to start doing a lot more on Locals in Rumble. I did a live stream on Locals yesterday. I'll put links in the show notes for that as well. A guy emailed me and said, it's behind a paywall. No, it's not behind a paywall. You just have to have an account. It's free. Free to join Locals, and you should. Locals, I just love it, man. It's like Twitter plus YouTube combined. It's great. For those who want to be more involved, i.e., you want to post stuff on my Locals channel, you have to have a $5 month contribution. All right, so you got to be a supporter of mine on Locals, and you can write stuff, you can post comments, you can post links, you can post videos, you can, if you're doing your own blog post, you can post it there. Let me just give you an example. So I'm on my news feed on Locals. Here's for some reason I just came in contact with these guys, but Viva Barnes Law, Robert Barnes and David Frey from Canada. These guys kick ass. I love these guys. I'm on here a lot actually. People's Pundit right here. My man Rich Barris and Laura Barris out of North Carolina. Big fan. Anyway, I support these guys. Michael Yon, big fan of. And it's fantastic as you get to post stuff, and I love it, man. Of course, here's my Rumble channel. I just gotta get back doing that. So now that YouTube is gently reminding me again that I'm not long for their world, because look, I've done over 5,500 videos in the past. I'm sure I've done something that offends somebody in the AI. So, all right, so just sign up for those things. It's free. And again, if you want to be a supporter of mine, it's $5 a month. I mean, not going to break the bank. Anyway, so here we're going to go to heritagewealthplanning.com. We're going to scroll down to my blog posts, and we're going to click on Bonds Look Good Now. And I'm just telling you, man, do people not realize the extent of the insanity of the bond market this year? No one walking this earth has ever seen it so bad in bonds. I can't, at least in the United States. I can't fathom that people are sitting there after the bond market collapsed, and it's just crazy to me. I'm like, do you not understand? In fact, I'll show you something else here too. Posted this on my Locals channel. Think bonds are bad? See this? So look at this. 10-year Treasury since 1965, log scaled. All right, so log just means if say this is an inch from 0.5 to 1, that's 100% increase. That's an inch. 1 to 2 is an inch. 2 to 4 is an inch. 4 to 8 is an inch. 8 to 16 is an inch, if that makes sense. So for every inch, you're doubling the increase, the interest rate, if that makes sense. So here we go, 2 inches from 1965 to 1980, when we beat inflation because of high interest rates. So we went from 4, this is a 10-year, to 16 essentially. All right, not quite 16, but roughly. 4 to 16, that's was that a doubling? A quadrupling? It was a doubling. I don't even know what you say. Buddy, stop being so grouchy. Look at this. We went 1, 2, 3 inches. We went from 0.5 to 1, 1 to 2, 2 to 4. The greatest, you're never going to see this. To go that much again, we got to go from 4 to 8 to 16 to 32. It's not going to happen. Look at this. I mean, the greatest increase ever was by far smaller than what we see now. Yeah, everyone's going to focus on the net interest rate in terms of, oh my goodness, 16. But the increase, that's why the bond market was so pummeled. Now check this out. It's crazy. I don't understand it. So let's go. I want to show you something. We're going to go to my blog post, if that's okay with Pablo. And we're going to show you. Look, this is, if I can make this go up. There we go. Oh, by the way, just click on these ads. I'll get money. So if you want to shop Hannah Anderson pajamas, click on the ads. Don't just do it to make me. I mean, if you're not going to theoretically buy something, don't. But anyway, all right. So here we got. This is as of 11/25. All right. So last week. This is as of 10/24. Literally a month before. The 10-year a month ago was at 4.25. The 10-year basically now is at 3.7. That's down 55 basis points. A 13.4% decline in the yield in a month's time. When the yields go down, what happens to the price? Well, the Ginnie Mae fund right here is up from, I don't even know what that is, but it's up 3.11% in a month's time. So the yield on the 10-year Treasury is down 14%, basically 13%. The price of Ginnie Mae is up 3.11 in a month's time. That does not even include the interest income, which will add another 25 basis points or so. So by the end of this month, the Ginnie Mae will probably be up 3.25 in a month's time for a bond. Here's total bond index. It's up right now 3.5. Now again, just with price, not including interest income because they haven't paid the interest income yet. Add the interest income, probably up another 25 basis points to 3.75 in a month's time. It's crazy. Now, what does this tell you? That the markets are not pricing in long-term interest rate increases. They're just not. In fact, if anything, they're pricing it lower. Actually, I saw something yesterday. I couldn't believe it. Owen Benjamin talked about this on his podcast. Morgan Stanley did a study of working women aged 25 to 44. Half, Morgan Stanley expects, will never get married and have children. Half. That's a societal collapse. Like we can't, it's not inflationary, not growth oriented. Half of working women, according to Morgan Stanley, will not ever get married and have children. That's a society in decline. I mean, it's just, we're seeing it in China, we're seeing it in Japan, we're seeing it in South Korea, seeing it all over Europe. That's not a growth oriented inflationary economy. It's just not. Anyway, the Feds control the short-term rates, but the market controls the long-term rates. So I wouldn't expect mortgage rates to go down much anytime soon. And the reason for that is because net interest income, I talk about here. The bank's biggest profit center is net interest income, how much they can make on the lending that they do. Anyway, so let's see here. Yeah, it's crazy not to look at bonds. So I want to look at, if we go to Portfolio Visualizer, I did 3 for the whole year of 2022, but it stops at the end of October. It doesn't go into end of November because we don't have the end year. So I wanted to look at 3 funds, the Total Stock Index, Vanguard Wellington, and Vanguard Wellesley. All right, so basically what we're going to see is at the end of October, the Wellesley fund was down from $10,000 to $8,700. That's off its lowest, which is $8,500. So the Wellesley fund was down about 15% year to date at the end of September. It got back about 2% at the end of October. But check this out. So again, it's down to $8,700 at the end of October. And guess what? If we look at Wellesley, this is Wellington. Well, let's go back to Wellesley. Check this out. Remember, it's down to 85. It was down 15%. Now it's down only 7%, 7.8. It's basically got back half of the losses it had in the last 2 months. I mean, that's nuts, dudes. Wellington, pretty much. Now remember, Wellesley's got predominantly bonds, about 60% bonds. Wellington was down to $8,300. It was down about 16.5% at the end of October. When again, the worst it was down was about, it's down 20% year to date at the end of September. Now let's look at Wellington, BWBLX. Wellington now is down 13%. So the bonds, because it doesn't have that many bonds. It got about 35% bonds. But still, it was down 20%. Now it's down 13%. That's a 7% increase. It's picked up a third of what it lost so far. Total stock index was down to $7,500 at the end of, down 25% at the end of September. And now total stock index is down, down 17%. Again, so you should. What does that shit tell you? Well, it tells you that the bond market has come back strong, much stronger than the stock market, because the bond market had never seen years like we had. Anyway, and so I get these questions: are you still hip on Wellington, Wellesley? Absolutely, dudes. Why would you sell it now? Remember, the market is so good at predicting the future. The market isn't saying today what's happening; it's saying what we expect 3 to 6 months. And the market isn't just some guy. This isn't communism, top-down command and control economy. It's everybody in the aggregate. Millions of different people's emotions, thoughts, and minds saying this is what we expect the market to do in 3 to 6 months. And if you'd ever, I don't know where else to put it, man. If you're thinking, oh, my bonds are getting killed, you already got half back of what you lost. And there's just more to come now that you have higher interest rates and stuff. Anyway, there you go. I don't. Someone asked me on the last stream on locals I did last night. They said, "Hey, how high are rates going to go up?" They're going the opposite direction. They're going down. When bond rates go down, the prices go up. Love to hear your thoughts. Don't forget to sign up my other channels. They'll be in the subscription or the descriptions down below. I will be doing locals only content probably every day, and Rumble as well. But just keep that in mind. If you want to find out your old buddy Josh, you got to find other channels to find me. And I put it in the show notes, the descriptions for you to do just that. All right, love your thoughts. We'll see you